Let's talk about how to stop a civil case from turning criminal in the first place. Let's also talk about how the IRS Criminal Investigation Division decides who gets prosecuted and who doesn't. First of all, if you think the IRS only goes after major criminals or large corporations, you're sorely mistaken. Every year, seemingly ordinary taxpayers, business owners, professionals, investors find themselves at the center of full-scale criminal tax investigations. These often start out as simple IRS audit. What triggers the shift? It isn't always the size of the number. It's the appearance of willfulness in your non-compliance. Before you respond to the IRS in an audit or criminal tax investigation, you need to understand how tax evasion cases actually begin, what keeps them civil, and what keeps them from turning criminal. Hi, I'm David W. Klasing. I'm a dual-licensed tax attorney and CPA, and for nearly 30 years, I've represented clients in high-stake tax disputes, civil audits, criminal tax investigations, and voluntary disclosures. I've done this across the United States and internationally. My team and I understand how IRS Criminal Investigation, known as CI, chooses and builds its cases, and more importantly, how to stop a civil IRS audit from crossing that line. How tax evasion cases really begin. Tax evasion cases almost never begin with a raid or an indictment. They begin quietly. Often, an IRS examiner notices something unusual: repeated underreporting of income, unsubstantiated deductions, suspicious patterns of cash activity, missing returns coupled with a very luxurious lifestyle, income that doesn't match third-party reporting, offshore taxable activity that doesn't appear on your federal tax return. These are all called badges of fraud. And once they appear, civil examiners are trained to stop asking questions and refer the case to the IRS Criminal Investigation folks. You are never notified when that referral happened. Your civil audit simply stops, it stalls. Eventually, 2 new IRS agents, special agents, will begin gathering evidence to bring a criminal tax prosecution. What counts as tax evasion? Tax evasion is not a single act. It's a pattern of conduct that suggests intent, such as underreporting income that you fully knew about, keeping 2 sets of books, claiming fake or inflated deductions, and deducting personal expenses as business expenses, paying employees off the books, often in cash, structuring deposits to avoid cash reporting laws, using nominee or shell entities to hide taxable income, moving money through crypto or offshore accounts to hide it, destroying or altering record. These actions create the narrative CI is seeking. It's evidence that'll show that a taxpayer acted intentionally, that they violated federal tax law on purpose. Intent, not math, is what turns a civil case into a criminal one. The IRS has more data than you think. Today's IRS is not the IRS of 10 years ago. They receive massive amounts of data from banks, payment processors, crypto exchanges, foreign financial institutions, state agencies, foreign governments, employers and payroll processors, business partners. They get 1099-K, 1099-NEC, 1099-INT, 1099-B, and W-2 reporting. They have their own internal networks. CI uses sophisticated analytics and AI to cross-reference income, transactions, and lifestyle indicators. If you think the IRS won't notice discrepancies, think again. They will. How a civil audit turns criminal. Here's the point taxpayers don't expect. You won't know when a civil audit becomes criminal. When an examiner spots evidence of fraud, they simply stop asking questions. They freeze communication, they disappear. And at the same time, they quietly send your file on to CI. Meanwhile, CI pulls your bank records. They start interviewing third parties. They start contacting foreign employees. They analyze offshore activity. They pull crypto transaction histories. They review your prior tax year filings, 6 years worth. They start studying your lifestyle versus your reported income. By the time CI contacts you, usually 2 years later, they already believe you committed a crime and most likely already have the evidence to prove it. And they're reaching out to gather the last pieces of evidence, usually from your own mouth if you're dumb enough to speak to them without counsel present. If you get nothing else out of this video, if a special agent shows up at your door, whether by phone, letter, or at your front door, you must never attempt to try and talk your way out of the problem or explain anything away. Simply say, "I want to speak with a tax attorney before we talk." Why? Because lying to a federal agent, even casually, is a felony in and of its own right. And unlike your communications with your CPA or accountant that prepared your original returns, your communications with an attorney are privileged. Your CPA can be subpoenaed. Your attorney cannot be forced to be a witness against you by subpoena or otherwise. Accountants are great at preparing tax returns, but they're not trained to protect your verbal or written communications, nor do they have the legal ability to do so. If your accountant is contacted by CI, they can be forced to testify about what you told them, what they saw, their notes and their worksheets, their draft returns. An attorney CPA, on the other hand, can protect all communications and work product. We can provide a shield. A new CPA can work under what's called a Covell agreement so that the strategy to defend you stays privileged and the communications. This difference is the line between a contained civil case and a full-on criminal tax prosecution. How we defend tax evasion cases. When our firm takes on a tax evasion case, we follow a structural defense protocol. We shut down all direct contact between the taxpayer and the IRS. We reconstruct the financial picture using attorney-protected internal accounting. We identify weaknesses in the government's evidence, if there are any. We develop an intent-neutral explanation for every red flag where possible. Where available, we pursue voluntary disclosure, if available and appropriate. We negotiate early before prosecution becomes inevitable. Our objection is simple. Stop the case before it ever reaches the Department of Justice Income Tax Division for prosecution. Let's talk about when voluntary disclosure is the right move. If you knowingly and willfully underreported income, especially for multiple tax years, if you've hidden foreign accounts and did not report taxable offshore income, if you filed false returns, the safest path back into compliance may be the IRS Criminal Investigation voluntary disclosure practice. If submitted correctly before CI contacts you or an audit is open, it can eliminate the risk of criminal prosecution in its entirety. It can reduce civil penalties that would otherwise apply, and it can allow you an ability to correct past filings safely. But if you wait until the IRS opens an audit or begins an investigation, it's already too late. If you believe your IRS audit is sensitive because of underlying intentional compliance issues, or if IRS Criminal Investigation has contacted you, your next move is absolutely critical. A single conversation with the IRS can determine whether your case ends quietly with a civil assessment or morphs into a criminal tax prosecution. Call the tax law offices of David W. Klasing at 800-681-1295 or visit KlasingAssociates.com to schedule a reduced rate initial consultation today. We'll protect your constitutional rights, secure your communications, and defend your future and your network. To date, no IRS client that this firm has ever represented has been criminally prosecuted for tax crimes.